You know that feeling when you've been watching something build for months, maybe years, and suddenly all the pieces start falling into place at once? That's exactly where we are right now with precious metals. And I'm not talking about some vague prediction or hopeful thinking. I'm talking about concrete, measurable shifts happening in real time that are setting up what could be the most significant move we've seen in decades. Let me paint you a picture of what's actually happening behind the scenes, because the mainstream financial media isn't going to tell you this story. They're too busy talking about the latest tech stock or whatever distraction is trending this week. But if you've been stacking, if you've been patient, if you've been watching the fundamentals while everyone else chased paper gains, this is your moment. Central banks around the world have been on an absolute buying spree. We're not talking about modest accumulation here. We're talking about the kind of aggressive purchasing that makes you sit up and ask, what do they know that we don't? Poland just added another significant chunk to their reserves. Turkey continues to stack at a pace that would make any retail investor jealous. China, India, Singapore, the list goes on. These aren't random purchases. These are strategic moves by institutions that have access to information and analysis that most people will never see. But here's what makes this different from previous cycles. It's not just the volume of buying. It's who's doing the buying and why. When central banks accumulate gold, they're making a statement about the future of the monetary system. They're diversifying away from dollar-denominated assets. They're preparing for a world where the rules we've lived by for the past 50 years might not apply anymore. Think about what happened in the early 70s. Nixon closed the gold window and suddenly the entire global monetary system had to recalibrate. Gold went from $35 an ounce to over $800 within a decade. But that move didn't happen overnight. It happened because smart money saw the writing on the wall and positioned themselves before the crowd figured it out. The central banks buying today, they're that smart money. They're positioning for what comes next. Now let's talk about supply, because this is where things get really interesting. The mining industry has been underinvesting in new projects for years. You can't just flip a switch and produce more gold or silver. It takes years, sometimes a decade or more, to bring a new mine online. Environmental regulations, permitting processes, capital requirements, all of these factors mean that even if prices spike tomorrow, supply can't respond quickly. Silver is even more constrained. Industrial demand is absolutely exploding. Solar panels, electric vehicles, electronics, 5G infrastructure, every major technological trend of the next decade requires silver. And unlike gold, most silver comes as a byproduct of other mining operations. When copper or zinc production slows down, silver supply gets squeezed even harder. We're looking at a situation where industrial users are competing with investment demand in a market that's already tight. The COMEX inventories tell a fascinating story if you know how to read them. Eligible versus registered, the amount of paper claims versus physical metal, the delivery patterns. All of these data points are flashing warning signs. There are far more claims on physical metal than there is actual metal available to deliver. It's a system that works perfectly fine until suddenly it doesn't. And when confidence cracks, when people start demanding physical delivery instead of accepting paper promises, that's when price discovery gets very interesting very quickly. Let me tell you about something most people don't understand about the precious metals market. There's this massive disconnect between the paper market and the physical market. You can trade gold and silver futures contracts all day long, moving billions of dollars with the click of a mouse. But try to take delivery of a significant amount of physical metal, and suddenly you're dealing with premiums, wait times, and availability issues. That spread between paper and physical, it's been widening. And that widening spread is telling you something important about where the real value lies. Quick aside here, because this is relevant if you're thinking about your long-term financial security. If you're sitting on $100,000 or more in retirement accounts, there's a way to get physical precious metals into those accounts without triggering tax penalties. I put together a comprehensive guide on how gold IRAs actually work, the mechanics, the custodians, the storage requirements, all of it. It's in the description below. Worth checking out if that's relevant to your situation, because there are some specific rules and timelines you need to understand. Anyway, back to what's happening in the markets right now. The geopolitical situation is adding another layer to this entire setup. We're watching the emergence of alternative payment systems, countries settling trade in their own currencies, discussions about commodity-backed currencies, the whole de-dollarization trend that's been building momentum. Now, I'm not saying the dollar is going to collapse tomorrow. That's not how these things work. But what I am saying is that the world is slowly, methodically building the infrastructure for a monetary system that doesn't rely exclusively on dollar dominance. And when you have that kind of structural shift happening, when you have countries that represent billions of people and trillions in GDP looking for alternatives, precious metals become more than just an investment. They become a strategic asset. They become the one form of money that doesn't depend on any government's promise or any central bank's balance sheet. Look at what happened during previous periods of monetary uncertainty. Weimar Germany, Zimbabwe, Venezuela, Argentina. Every single time a currency loses credibility, people flee to tangible assets. Gold and silver have been money for thousands of years because they have properties that paper currency simply cannot replicate. You can't print more gold. You can't digitally create silver. There's a finite amount, and that scarcity becomes incredibly valuable when trust in the system erodes. The technical setup on the charts is equally compelling if you pay attention to these things. We've seen consolidation patterns that typically precede major moves. We've seen false breakdowns that shook out weak hands. We've seen the kind of base building that creates the foundation for sustained rallies. The moving averages are aligning, the momentum indicators are turning, and the price action is showing that accumulation phase that happens before the crowd notices. But here's what really matters. It's not just one factor. It's not just central bank buying or supply constraints or geopolitical tensions or technical patterns. It's all of these things converging at the same time. It's the confluence of fundamental, technical, and sentiment factors all pointing in the same direction. That's what creates the kind of moves that people talk about for decades afterward. Think about the people who bought gold in the early 2000s when it was trading around $300 an ounce. Everyone thought they were crazy. Gold is a barbarous relic, they said. It doesn't pay dividends, they said. It just sits there, they said. And then gold went to $1,900. The people who understood the fundamentals, who saw the money printing and the debt accumulation and the currency debasement, they didn't care what the critics said. They understood what was coming. We're in a similar setup now, except the scale is bigger. The debt levels are higher. The money printing has been more aggressive. The geopolitical tensions are more complex. And the number of people who understand what's happening is still relatively small. That's the opportunity. That's the moment when positioning yourself ahead of the crowd can make a generational difference in your financial situation. Silver stackers, you've been patient through some frustrating years. You've watched the gold-to-silver ratio stretch to levels that made no historical sense. You've seen the price get hammered down despite industrial demand increasing. You've dealt with premiums that made buying physical expensive even when the spot price was low. But here's the thing about silver. When it moves fast. The market is smaller, the leverage is higher, and the volatility can be breathtaking. Go back and look at what happened in early 2011. Silver went from around $18 to nearly $50 in a matter of months. It wasn't a steady climb. It was an explosive move driven by a combination of investment demand and short covering and momentum that fed on itself. Now, I'm not predicting we see that exact pattern again. Every cycle is different. But the underlying dynamics that create those kinds of moves, the tight supply, the growing demand, the undervalued starting point, those dynamics are present right now. The mining stocks are another piece of this puzzle that's worth understanding. When metal prices rise, mining companies don't just benefit linearly. They benefit exponentially because their costs are relatively fixed, while their revenue increases with the metal price. A 20% move in gold can translate to a 50 or 100% move in a well-positioned mining stock. That leverage is why people pay attention to the sector, but it also means you need to be selective. Not all mining companies are created equal. Look for companies with low production costs, strong balance sheets, and projects in stable jurisdictions. Look for management teams that have been through previous cycles and know how to navigate both the good times and the challenging times. Look for companies that are actually producing, not just exploration stories that might pan out someday. The quality names in the sector, the ones with real assets and real cash flow, those are the ones that can deliver the kind of returns that change your financial trajectory. But let's bring this back to the bigger picture, because that's what really matters. We're living through a period of monetary experimentation that has no historical precedent. The amount of debt in the global system, the size of central bank balance sheets, the negative real interest rates, the disconnect between asset prices and underlying economic fundamentals, all of this is unprecedented. And when you're in unprecedented territory, you need to think about what happens when the experiment ends. History shows us that every fiat currency eventually fails. Not some of them, all of them. The average lifespan of a fiat currency is around 27 years. The dollar has been a pure fiat currency since 1971, over 50 years now. That doesn't mean it's going to collapse tomorrow, but it does mean we're in the later stages of this particular monetary experiment. And in the later stages, the distortions become more extreme, the interventions become more desperate, and the eventual resolution becomes more dramatic. Gold and silver are insurance against that resolution. They're the assets that maintain purchasing power when paper currencies lose theirs. They're the store of value that doesn't depend on any government's fiscal discipline or any central bank's credibility. And right now, with everything that's happening in the world, with all the warning signs flashing, the insurance premium is still relatively cheap. Think about what you're actually buying when you acquire physical precious metals. You're buying thousands of years of monetary history. You're buying an asset that has survived every empire, every currency collapse, every financial crisis. You're buying something that will still have value long after today's paper currencies are forgotten. That's not speculation. That's historical fact. The people who understand this, who really grasp the implications of what's happening in the monetary system, they're not worried about short-term price fluctuations. They're not checking the spot price every hour wondering if they should sell. They're accumulating, they're holding, and they're waiting for the moment when the rest of the world figures out what they already know. And here's the beautiful thing about being early. You get to accumulate at prices that will seem absurdly cheap in hindsight. You get to build your position before the premiums spike and the availability dries up. You get to be on the right side of the trade before it becomes obvious to everyone else. That's the advantage of understanding the fundamentals and having the patience to let them play out. The moment we've been waiting for isn't some specific price level or some particular date on the calendar. It's the moment when all these underlying factors that have been building for years finally express themselves in price. It's the moment when the paper market loses credibility and physical demand overwhelms available supply. It's the moment when central bank policies that seemed sustainable suddenly aren't. It's the moment when the crowd realizes that the emperor has no clothes. We're closer to that moment than most people realize. The signs are everywhere if you know where to look. The central bank buying, the supply constraints, the geopolitical shifts, the technical setups, the sentiment extremes, all of it is pointing toward a major repricing of precious metals relative to paper assets. And when that repricing happens, when the market finally acknowledges the true value of scarce, tangible monetary assets in a world drowning in debt and paper promises, the move is going to be significant. So if you've been stacking, if you've been patient, if you've been holding through the frustrating periods when nothing seemed to be happening, this is your validation. This is the moment when all that patience and discipline pays off. This is when understanding the fundamentals and ignoring the noise gives you an advantage that most people will never have. The setup is there. The fundamentals are there. The catalysts are there. Now it's just a matter of time before the market catches up to reality. And when it does, when precious metals finally get the recognition they deserve as real money in a world of increasingly questionable paper, the people who position themselves early are going to be very glad they did. Stay focused on the fundamentals, stay patient with the process, and most importantly, stay positioned for what's coming. Because this moment, this convergence of factors that we've been watching build for years, this is exactly what we've been waiting for. The pieces are in place, the stage is set, and the next chapter in the precious metals story is about to be written.